Hey guys, it's Boris, and I'm about to show you the step-by-step structure of my scalping setup, which can be used, by the way, on any time frame. But I'm going to start with a 1 minute time frame because that's what we use for our day trading structure. What you're looking at right now is a live feed of the NASDAQ CFD. I'm going to show you exactly how I would structure a buy trade, and then I'll show you how I would structure a sell trade. So the setup is extremely simple. As you see, it's a very, very clean chart. We have nothing on the chart except two moving averages, which is the 26 EMA and a 12 EMA. These are the MACD averages. In fact, what you're seeing here is basically the MACD histogram deconstructed as just a moving average structure. Here are the rules as we trade them. We have the MACD, which tells us the trend. So if the blue line, which is a 12, is above the black line, which is a 26, that's an uptrend. We call that an up slice. And if it's the other way around, it's a down slice. In addition to which, we have these reference levels, which are marked by arrows, up arrows and down arrows. And what we do is actually a little bit counterintuitive, but it is extremely effective precisely because it is not what everybody conventionally does. We do not look at up arrows in an uptrend. We don't care if there's an up arrows. Occasionally, the point is that up arrows sometimes will give you very, very good signals to the upside, but not always. And we are looking for something like an 80 to 85% accuracy ratio. To do that, we actually need to look at the down arrows, because the critical thing about our setup is that we look for failure of sellers in an uptrend or failure of buyers in a downtrend. So how does that occur? That occurs in a very simple fashion. First, we have a down arrow like the one marked over here, or perhaps let's take a look at this one. It's a little bit sharper and cleaner because this is the market close, and this is now the new Asia open session, right? So here we have a down arrow. What we're going to do is measure the high of this down arrow, which is right over here. And we're going to put our marker right here to the high, not to the body, but to the high of this up arrow, which is around 11,717, right? And we are looking for a candle that will close, not just pierce, but close above the high of the sell arrow. Once we get that, an up structure, a beat to the high of the down arrow, as with this candle over here, we simply go long on the close of this candle at market. And we trade this with a 10 target and a 20 stop. Super easy and super squeezy, as you can see. Totally clean, clear trades. We do the same thing to the downside, the other way around. So let me just kind of find a little bit of the downside price action. Let's go down here. We can make it a little bit smaller. Here's a downside price action. Let me get a little bit bigger on this particular slice, and you'll see what I mean the other way around. Okay, so here we have a blue, which is a 12 EMA, below the 26. It's a down slice, down trend, right? We also have an up arrow over here. This particular candle is an up arrow. We're looking for basically the reverse structure. We're looking for the low of this particular candle. I'll just double click this, get it down. Low of this particular candle to be broken on a closing basis. So effectively, we're going to get short right on the close of this candle. This candle closes below the low of this up arrow, and we get short, and it's plus 10, super easy. Now watch what happens again. Now we have another up arrow over here, and this particular candle right over here closes below the low of this up arrow, and we get short again. And this gives us an opportunity to make another 10 points. Now we go forward and we look at this down arrow. That's not a trade for us because we're looking only for up arrow failures. Let's see if we have any more. No, we don't. So basically, we have just two clean, simple shorts in a downtrend that we take, and that's all we do. The reason we are so effective and so efficient and so profitable is because we only take the setups as they are structured, not anything else. Now, there's a couple of other minor variants that I want to let you know about that we add into the strategy. The single most important one is the following. Let's say we have a 20-point stop on our target. It doesn't matter. Sometimes we could have a bigger stop. Sometimes we have a smaller stop. But regardless, let's say if we're working with a 20-point stop. Let's imagine a situation where our trigger candle, let's say this is a trigger candle, is actually bigger than 20 points. That means the high and the low of the candle that triggers our trade is actually bigger than our stop budget. If that's the case, we pass up on the trade, because what that shows us is that all of our profit possibility has already been taken. It's already been baked into the price. The price has already moved so much down into our zone that we don't have a margin of safety. So we pass up on candles that are bigger than our stop budget. And of course, the beauty of this is that if you're trading the 1 minute chart, you have a 20-point stop budget. If you're trading an hour chart, you may have a 50-point stop budget. So it's very, very adaptable to the time frame that you want to trade this on. And that's pretty much it. We have one other interesting structure that we like to trade that is not our dominant trade, but that is a trade that we like to do to complement to our strategy. So our strategy, as I showed you, is strictly a trend-based strategy. We look for failures of buyers in a downtrend, failures of sellers in an uptrend. But then, as always, all trends generally come to an end, and there's always a turn in the trend. And we have a structure to trade that turn. And the way we trade the turn in the trend is what we're looking for is actually a failure of sellers to get it lower. And the way we do that is, if this is a sell candle, we look for the high of this sell candle to be closed on. So this particular candle actually closed above the high of the sell candle. That tells us the sellers are exhausted. They've killed this downtrend as much as they can for the time being. And that gives us an opportunity to get long over here on a turn to the upside. So we can trade both trend and turn with our structure in a very consistent, very profitable, very useful manner. That's our strategy in a nutshell. Everything else comes in the trade room, but hopefully you'll be able to understand the basics so that you can come and follow us every single day as I live trade.